Welcome, everyone. All right, so let's get right into it. So I got a post from X, and I've been sharing a lot of things on Facebook. And it kind of every time I post something along this topic or thought process, it always causes a little bit of a stir. So let me see if I can bring it up real quick. So it was by the lazy Canadian investor, and he basically is talking about your home not being an asset to some extent, or if you're treating your primary residence as your retirement plan, you won't be retiring anytime soon. Did you folks get a chance to kind of look that over, or do you guys have any thoughts on that? Maybe Emily, you can go first.
The first thing that I just want to say going into this conversation is this guy's Canadian. And so this doesn't have a huge impact, but it certainly does have some impact. Canadians do not have fixed 30-year mortgages like we do. And so actually a lot of countries don't. And so that's one of the big benefits we have of living and investing in the United States is you can buy and know that whatever my situation is with this interest rate, except for maybe property taxes if something crazy happens, but we have fixed rate debt for 30 years. And so I think he even mentions a price point and then he says another price point and another interest rate. He's not talking about a refi out of, hey, I wanted to pull money out. That's necessity. They have to plan that I can afford. It's like commercial, right? When people right now have bought at really low interest rates, and then we have these higher interest rates and people are getting in trouble with their commercial investments when they have to refi. It doesn't dictate the whole conversation we're going to have, but I think it's important to keep in mind for people that don't know that as we go into this conversation.
Great points. And I believe Zuber also just did an interview with a person who's in Canada, a Canadian investor, and they also talk about the fixed rate debt and things like that. Gus, actually both of you, being rock star realtors also, so this could have an impact on the way people look at buying homes or purchasing homes. But Gus, for you, did you get a chance to take a peek at that kind of post I shared?
I when I got it, I was on my way back. I was in the car, but I didn't get to dive into the full article. I just read the top part. I mean, is your house, so is the gist of it more of is your primary house, should you look at it as a primary as an investment property or something that you can live off down the line?
I think he's kind of gearing it more towards, yeah, a lot of people that is their retirement plan, right? So they're looking at it as an investment. They figure they pay it off in 30 years and now they can just ride off into the sunset, when in retirement period, right? But he's basically kind of saying like if that's your plan, it's really not probably the best plan today. So that's kind of maybe the gist of it.
And he's really talking about condos too in Canada. It seems like that's what he's highlighting.
Just on the primary home being an investment, I think it is to a degree. Now, is it an investment that it's going to pay off later on down the line when you retire? That's where I question. Why I say it's an investment is when you put money, so you're taking that money, and it's not like you're paying rent and that money's going away. You're taking some of that money, and let's say early on, 10% of it is going towards the principal of the home, but you're paying that each month, so you're paying down the principal of it. So at some point that whole building is going to be yours as far as fully owning that particular building. The part would want to say is when you take money and you put it in the bank, aren't you saving that money, to a degree? So what you're doing for your primary home, you're kind of doing the same thing. You're paying that down. It kind of is your investment down the line. And let's say you get to you're 66 years old and you decide to sell your home and you make 300,000 off that home. Taxes may hit it, whatever may happen. You walk away with 200,000. That 200,000 is real money at the end of the day. So, if you go into a home or something along those lines, that's money that doesn't go away. But is it something in 2026 you should look to benefit you in the long term? No, I disagree with that. You got to have a lot more, especially how inflation is right now. You got to definitely have a lot more things going on than just paying down on your principal on your primary home.
A lot of great points there. A lot of people tuning in this morning. Thank you for stopping by. A lot of great points also. So Alex, the accidental investor, does say your home is your training wheels to real estate investing. Harrison, who's tuning in from X, who will be on next week, Wednesday. Because if people don't know, Wednesdays, Joel, Lauren, and I will be bringing different school members on every week. So Harrison's going to jump on Wednesday. So let me know if you want to jump on. But he says articles like this make me wish I heard of Lumberjack's 4321 method earlier. Yeah, we can dig into that a little bit after. But yeah, I guess the biggest thing for me and kind of what I, people were commenting on my Facebook post, and I think I was just saying more, people are retiring on it currently, so like maybe boomers and whatnot, and it has worked for them. But the way I see it is, it definitely probably doesn't fit this next generation as far as just relying strictly, or not saying relying, but using your home as your retirement plan, right? Because a lot of people are trying to be mobile. Job opportunities are popping up in different locations, and it doesn't really work for, like, 30, 40 years ago, people would just kind of live in one area, work one job for 40 years, and then they would retire. So I think having your retirement solely based on this primary residence is really going to set you up for failure to some extent. But to Gus's point too, it is a good way to teach you about money, forced savings. It's like a forced savings account. But I think if you're looking at it as an investment, yeah, hopefully we can change some people's thoughts on that a little bit. Anything
You
you want? Yeah.
you can use your home as an investment tool. You cannot use your home as your retirement plan. There's lots of ways that as an investor, you can buy your home, pay down that balance. Here's the deal too. If you bought a home, fixed it up as you lived in it, and transferred homes every 2 years or more, and that was your primary home, you didn't run a business out of it. That's like people that do live in flips. You could have, if you're married, 500,000 or less of capital gains. If you're single, 250 or less of gains, and not pay capital gains each time. So if you just went from house to house to house, that's an investment tool. If you got a house and you got good equity in it after time in the market or rehabbing it, you could borrow a line of credit against that to then invest in something else. But here's the problem. If you're thinking of it as your retirement account, when the time comes, you either have to sell it or you have to do a reverse mortgage or something dangerous like that, or you're borrowing against it, which at retirement doesn't make sense. Now, as a young person, it makes sense to invest and pay it back, but just as a plan, no way. And I have had clients come to me who have these big houses that they probably bought pretty low. They're paid off. They have a ton of equity in them. And they go, hey, I want to sell this and downsize to maybe a 2-bedroom. They have a 5-bedroom, laundry on the main level. Depending on your market, my market does not have a lot of smaller homes for affordable prices. And so basically they would be getting rid of their house and transferring laterally because costs have gone up so much that they're not keeping that money because they have to buy something else. So unless you're going to then move to a lower cost of living area and shift that money intentionally, there's a lot of pieces that don't make sense when you go to retire. Absolutely, your home can be an investing tool. And of course, we talked about house hacking. I saw a lot of comments on that where you rent out a basement apartment or even rooms or whatever. But just to think, I'm going to retire and this is my plan, only if you sell it.
Gus, you want to add anything to that?
One thing that pops up in my head that a lot of being an agent, when I'm working with older clients, they tend to sell their property. And I don't know if this is a trend where you guys are, have you heard this, but then they buy a mobile home down in Florida, and like a small mobile home for like, 80, 90,000. And I saw pictures of them sometimes. They look phenomenal. They look way better than they look up here. So I see that as a plan, but now how things are going and there's a lot of unknown, I don't think that's a safe plan. I think it's good to go ahead and have your primary home, pay it down, and see what happens when that time comes around. But to rely on that, I think you're going to be in a tough spot. You're going to be one of these people on the internet talking about life ain't fair because you didn't have a solid plan at the end of the day.
I love that. And I think a lot of it, for me, it's more kind of just the mindset shift, right? Because so if you're looking at your primary residence as an investment, and that's why a lot of people, like both of you kind of touched on, maybe they're buying a bigger home because they're thinking this is an investment, or I'm going to put this much money into renovations, I'm going to fix this up because it is an investment, right? And the returns aren't the same because you are putting money into this property where you're living, and maybe you like it, you like these things you're adding to it, but now when you sell it or whatnot, you're not getting that same returns back. So if you're looking at it as an investment, it is handcuffing a lot of people, right? As far as when it is time to retire. So um, Alex, the accidental investor, says, I look at everything as an asset or liability, even my kids. But he says lovable liability. Absolutely, yes. I think you did touch on what is that?
And your partners, so all the people that are single and dating, or young and dating, or your partner can be a liability too. Think of it that way. Are they going to level you up, or are they going to cause you problems and cost you money?
Very true. I also want to remind everyone I did put Emily and Gus's YouTube channels. Gus kind of finally got his off the ground running, getting some
Yeah.
consistent videos out there. And I just want everyone to know that is not a different Emily Lopez on the thumbnails. It may look a little bit different, but that is still the Emily Lopez from our community on his
The
video.
AI is doing me dirty, Gus.
Yeah, I'm sorry.
Well, it just doesn't look like me.
I'm sorry. I'm sorry.
No, but uh, Flavio was asking, I did house hack 4 times. Emily, I'm thinking to do a reverse mortgage in the future. Why not a good idea?
As a real estate broker, I have never had someone come to me in a scenario, or a family member after someone has passed, where there's a reverse mortgage and they are not in trouble. I had one lady who, her dad did a reverse mortgage because apparently he really trusted and loved Tom Selleck, and Tom Selleck advertised one on TV. And she's like, he didn't even need to do this. He had passed. And so then it was, by the time she got a realtor involved, they had to sell it very quickly because there's strict timelines on that once the owner passes. And she's like, this has put her as the child who was dealing with it once the parent had passed, in so much trouble. So I would say, I know people get desperate and that's what they have to do, but if you're planning, don't leave that for your kids or your heirs. Now, I don't have kids. So like if I did a reverse mortgage, whoever's getting my stuff is getting stuff for free. So I don't really care, right? But I would never want to leave a family member in that situation. I don't know the full ins and outs of them, but I've never had someone come to me that it wasn't dire straits and a stressful emergency hurry of a situation.
Gus, any experiences with reverse mortgages or anything?
No, I heard you got, well, I heard someone in the community talk about it before. Maybe it was a Zoom. I've never heard of that before. So, can someone, give me a breakdown of exactly what it is? Like a brief one?
I don't know the full ins and outs
No?
of them,
Okay, we'll move
but
on.
basically a lot of elder people do these. And if they have their house paid off, they'll give you money, and then basically, or either an amount or a monthly amount or whatever, some company. But then when you die, the house is basically theirs unless you can pay it back very quickly. So I've had it where there's still a decent amount of equity in the property with how they structured it, and the kids would get that equity, or their heirs or whoever they would be, but they have to sell this property very quickly. Otherwise, the reverse mortgage company takes it over. So you're dealing with a family member who just passed, trying to get their home ready, which a lot of times older people's homes go into kind of disarray. So they're usually not homes that are financeable or will sell quickly, but still there's this good chunk of equity that their heirs could have. But a lot of times they lose them to the reverse mortgage companies because they're really predatory in their terms and how quickly you have to action once the person passes. So I don't know the ins and outs, because anytime somebody mentions them to me, I tell them to talk to an attorney and have them review everything. But usually it's older people who need that disposable income. Like this, they have the equity in their home's paid off or close to paid off, but they don't have cash flow. So they borrow against their house, but then it's going to be somebody else's. And so families have to act really quick after their loved one dies to be able to redeem it or sell it and get the equity.
Yeah, I haven't looked into it too much recently. I know when you're talking about maybe the Tom Selleck area, it was a little more predatory, and that's kind of why a lot of the bad rap came from then. It has, I think, a lot more regulations on it now, but typically, yeah, it's kind of used in those situations, maybe in more of a emergency or dire strait kind of situation. But yeah, definitely the Tom Selleck area put a bad connotation with it. Um, but yeah, so let's see. So a lot of people, a lot of us probably are, we have read Robert Kiyosaki's book, right? Rich Dad, Poor Dad. And a lot of that book talks about, an investment, usually produces income, right? So a house produces expenses. So I think that's where a lot of this also comes into play. So do you guys also maybe believe that thought process of, because it's a primary residence, and let's say you're not house hacking or renting out a certain room and it's not generating income. So that's why would you still consider it an asset though, or an investment?
I'm torn, because it's not a property that's generating me money. It's something that's taken away from the money that I'm making. But then that's one part. So I could say, yeah, it's a liability. But then I'm like, if I would have purchased my house in 2018 and then everything boomed, then I could take a HELOC from it, and then I could use that money to buy other stuff. How is it not an investment? How is this me maintaining this house not an investment? So I'm torn on both sides. I get the part where it's not generating money, but then I get the part you owning the house for a long period of time, being able to dabble into that equity and then create money from it. So I don't, me myself, I don't think there's a clear cut answer with it. I think if you want to be this, you could be this. If you want to be that, you could be that. I guess I'm in that great part where I'm right in the middle.
And again, you said it, Gus. Your house is, we're not, so I think this is where someone's saying using it as retirement. Your house is an investment. Your house is not your retirement account. And so you can use it as a tool, like anything with money. If you're intentional and you look at the tools available to you and you're educated, then you can use it.
I think for me, I would probably be the best example of why it really comes down to mindset and how you're viewing it. Because I think I've told people before, when I first read Rich Dad Poor Dad, I thought it was the stupidest book ever. Like, it made no sense to me because, like, in Hawaii, you see a lot of people buy a home, pay it off, and they're living it for 30 years, and now they're, millionaire, multimillionaire because of the property values in Hawaii. So when I read Rich Dad Poor Dad initially, I was like, this is the stupidest book ever. It makes no sense. I know everyone around me is buying just a home and they're retiring off it, right? And to Gus's point, it's just really how you're going to use that residence, right? Because I know a lot of people do take HELOCs off it, but if your mindset is not about generating income or, you know having it cash flow, you're going to use that HELOC to go pay for your next trip or travels, right? Or pay for the next toy or truck, right? So it also still, like I said, it really comes down to mindset and who you're around, right? So like I said, when I first read Rich Dad Poor Dad, I thought it was the dumbest book ever. 10, 15 years later, when I read it, I'm like, man, if I just picked up on this at that time. So it really is just a mindset shift than anything. Hey, I see Dion tuning in. Thanks for stopping by. He will probably be going live when we're done then. But he holds the mantle for the richest homeless person. He took that from Jason Hartman. If anyone, so Jason Hartman was always the self-proclaimed richest homeless person because he was renting. He didn't have a primary residence. He was just searching. Jason Hartman finally is now purchasing his primary residence, and now Dion is selling his because he is moving from Washington and he's gonna now find where he wants to relocate to because of he is tired of things happening in Washington, and right now he's looking at Tennessee, Texas, and I believe the last one is Florida or Utah was kind of on that list. But right now, I think Tennessee is in the front. Let's see, Alex. Oh, go ahead.
I was gonna say one thing I want to hit on too is I notice a lot of times people when they go to sell their home, they'll come and say, "I bought it for this. I want to I want to make this much when I sell it," even just their primary home, not factoring in that if you come out where you make a little bit of profit, you just lived rent free for all those years. So you got to look at it that way too. Like Gus was saying, yes, I'm living there and I'm going to be paying to live somewhere no matter what. So if you're paying down a balance while it's appreciating versus rent, where you're just paying down somebody else's mortgage, even if you just come out even where you basically didn't pay an expense, if you do the math when you're done, that's also better than if you paid $1,500, $2,000 a month in rent. So, I mean, I just think there's a lot of these back pieces we don't think about, because I do know some people who don't want to own a home. I know some really wealthy people who rent because they don't want to do maintenance. They want to be able to call somebody for repairs. So I think you got to think about what you want and what you're looking for in your life. But living rent free by having a house that you come out flush with is still financially ahead than if you paid rent all those years.
Alex says Robert Kiyosaki uses that example to explain the concept. An investment can be a liability or an asset. Now, Curtis brings up a great point. And if anyone hasn't seen, Curtis did a great interview with Amelia from the school community. She's one of the co hosts of the Ladies of ORAC call on Wednesday, but that should be out on his channel. But Curtis says, is gold, silver an asset or liability? People buy it, but it doesn't generate income. Emily, you have a thought on that?
So I'm probably not the person to talk on this because I'm not that educated in this area, but I think it's what's your strategy. Just like people say, am I looking for appreciation or cash flow? Also, I think with something like gold and silver, you got to look at, can you hold it for a long term? And because I mean, when I talk to people that know about this, it seems like there's really good periods and then there's periods. Doesn't Jared buy silver? Isn't Jared really into silver? So he would be a good person to talk to about this. But it sounds like there's periods that have done really well, but then sometimes you have to hold on to it for a very long time, anything where it's something like this, like a commodity, right? And so I think you just got to be in it for the really long run, or be able to be in it for the long run if you're going to do something like that. For me, not fun, not a game I want to play, but Jared might be a good person to talk to there.
Gus, do you have any thoughts on it? Since it doesn't produce or generate any income, would you
Yeah.
consider?
First, I want to say I did catch that interview with Curtis that he had with that lady. That was a good interview. I'm starting to navigate. So now that we have that list now, I can click on people's pages and see, what their conversations are. So that was a good interview. The gold part is my brother was just talking about this morning, and we had a discussion. I was like, real estate crushes gold, and he's like, why are all you real estate people the same? We can bring up anything, and then it's always real estate is better than Bitcoin. Real estate is better than gold. I'm like, bro, like, this is just for me. I'm only speaking for myself. I don't got time to be wasting on gold or any of this other stuff. I got buildings that people are moving and getting out of. I'm making cash flow appreciation. That right there, cool. You know who I think that's good for? I think that's good for people who are already wealthy and then they're purchasing it to hold their wealth. I'm trying to get wealthy. So therefore, I have no time to purchase that shit. So it sounds cool and all, but for me, it's not for me. For all the people that are doing that, it's definitely an investment for them.
Yeah, I think I agree to all of that. Yeah, definitely. It's a great storage, right? To some place you may want to park your money. But as far because it's not generating income or cash flow, it's definitely when you're in a certain part of this journey, right? It does, like you're saying, it's not that beneficial or helpful to you. Alex says it depends on the market. Right now, mine is an asset. Um, Hey, Marlon RE, thanks for that. He says, good morning. This show is an asset. If you use the info, it will produce that cash. Thank you very much, Marlon. See, Curtis says, appreciate the kind words, Gus. Yeah, Amelia carried the show. Yeah, I didn't want to say that, but yes, Amelia did it. No, Curtis, you did a great job, man. Like I said, man, Curtis, check out. I did put Curtis's channel in the chat, and what Gus was talking about. If those of you are in school, and don't know, there is a QR code now that you can scan, and it basically puts everyone's kind of social media handles there, so it's all in one place, and you can go follow everyone and show your support. Hey, Hyder's tuning in. So Hyder will be joining in 2 weeks. So like I mentioned earlier, every Wednesday we're going to try to bring on different school members. So Jeff was on Wednesday. Jeff Dombach was on this past Wednesday. Next week will be Harrison, and then 2 weeks from now is All Nighter Hider. So that should be a fun one also. Let's see. There was shoot, what was it? Oh, I was gonna go into a little bit of the house hacking now because someone did mention it in the beginning. Someone did mention. Oh, Harrison was the one that mentioned Lumberjack's 4-3-2-1 method. So Gus and Emily, have you folks kind of heard what that strategy is or method maybe?
Is that where you use your FHA loan, buy a 4 unit, then the year after buy a 3, 2, 1. Is that the
Yeah,
method?
yeah. I mean, not necessarily FHA, but yeah, you can. But definitely start with a four unit, because you can still get the lowest down payment possible. Have the other units account for income, help with your DTI, help with the income. But also because you're starting with a four unit, it's easier to work your way backwards than if you were to start with a single family home, then try to go to a duplex. Because then now it's harder to justify why you're going from a single family home to a duplex, right? But when you're working backwards, it's easier to kind of justify to the lenders. Oh yeah, I want to transition to a more. I'm trying to work my way to a single family home in a sense, right?
I think that I talked about, I put a reel out similar to the topic. Um, so not only are you buying an asset where you're buying the maximum amount with the least amount to put down at 3.5, also you're getting good practice with having three other tenants. And especially if you're deciding to be the landlord, you're not putting it with the property manager, controlling three tenants and then going down to two tenants and then going down to one, you're making your job easier. Let me not say easy, because it's never easy to be a landlord. You're making it easier. Now you're down to the duplex. You're just sharing it with someone else. Then you're in your own, finally you're on your own house as a single family. Now you have what? You'll have what, three other buildings that are producing cash flow. So for me, if you're younger or in that position where you don't have family, that you gotta think about when you're moving into one of these buildings, I think that's a phenomenal idea. I wish I was not a knucklehead when I was in my early 20s and doing all the dumb stuff that I was doing. That's one thing I wish. I wouldn't have my kids right now, so maybe I don't wish, but sometimes I think about it, like, if I would have did this right now, I'd be at so much a great position. So when I see the kids going to Zuber's event, I was like, man, I hope they're not taking this for granted. The kids that are 20, I call them kids. I'm up there now, but the kids that are 20 watching this, don't watch this as entertainment. This is real. This is real stuff. Like anytime I'm meeting these 20-year-olds and they got 10 units or they're house hacking, I'm like, do you know 20 years you'll be my age? And then you'll have this longevity of paying that house down, all the equity built. I started 5 years ago. I'm crunching stuff up in a tight gap. You have all this time ahead of you. So that right there, if I was smart back in the day, I would have definitely have taken advantage of that 100%.
Just that time in the market from a really early age.
Yeah, I totally agree. I mean, yeah, from 20 to late 30s, or knucklehead is definitely what I would define my lifestyle, definitely. um and to that point, Gus, that you brought up, I think Dion and or Zuber, the three amigos, they've always touched on too, if you don't, you don't really realize it too, when you graduate high school, yeah, maybe you're trying to figure things out. You don't really, nothing is certain yet. But if you really think about it, when you graduate high school, you are probably much closer to financial freedom than you could think possible, right? You shouldn't have any bad debt at that time. I mean, I know people, do have kids young, but I mean, chances, percentage wise, you probably don't have any kids yet. You're not, so it's you are that close if you take certain steps, right when you graduate high school, right? And so, and then you could be like Zuber said, by the time you're 30, you could probably be financially free already to the most part. Victor, yeah, this is the thing we all the caveat all the time, right? Is house hacking is definitely one way to definitely make your home an asset, right? So Victor says, if you house hack, is that an asset or a liability, right? So I don't know. Have either of you house hacked before though? Oh yeah.
I have.
And was it as bad as, or I mean, what advice would because I think a lot of people, that's the one thing, right? Like they always think about how, oh, I don't want to have roommates, or I don't want to share walls, and
I
oh
don't
no,
own my family. I didn't have roommates, to clarify.
okay,
So I look at two things I just want to touch on. First is if you can't house hack, because sometimes, especially now with prices getting higher, we used to talk about do the 3.5% down or the VA loan if you qualify and house hack. with interest rates and prices being higher, you can't always start depending on where you're at. And you might have to live in a certain area for your job. Maybe you can't afford a fourplex or a triplex or whatever. The other option is when you buy your first home under buying, keeping in mind, I want to keep this as a rental and be able to qualify in the future for another mortgage within my debt to income ratios. Because if I start with a single family home, which is what we did because it was what was available to us, we bought, everyone graduating from college with me at the time was buying like $250,000 nice kind of long-term houses. We bought a $130,000 townhouse because I knew I wanted to be able to keep that and then buy my next property without having to sell that to fall within the debt to income ratios I needed to, and also make enough that I could save a down payment to go beyond that. So sometimes you can underbuy something and hopefully not have to sell it. It will be a good rental and you move on. But then after that, we bought another one of those. And then because if you live in it, you have no rent to count as income. It's only going to be debt on your debt to income ratios. But then we bought a triplex. It was one of the best things that we did because we lived in one unit and we rented the other 2 units. And it almost, because there's a main house and then a back house with an upstairs downstairs apartment, and we lived in the main house. If it was me single, I would have lived in the shittiest basement apartment and then got more income. But at the time we lived in the main house, we rented the back 2. It almost covered our full mortgage. Maybe we paid a couple $100. And then when we moved out, then we had all the income. And as we lived there, we renovated, we fixed them all up. And that's to this day one of our best cash flowing properties. And because it made our debt to income ratios look really good because we had the income on the back 2 units, it was easy then to qualify and move on to the next property.
Gus, have you house hacked?
No, I wasn't. I was a knucklehead, like I said. I was renting. And then when I met my wife, she owned her own place. And when I decided to take a leap of faith and join into real estate, I moved in with her. And then I got to understand more of the ownership side of it. So I've been renting. Only thing I know of ownership ahead of time was my dad owning the house. So when I lived with her, and like, oh, you got to pay the oil. You got this bill. You got that bill. I was like, okay. So I wanted to have that same house hacking feel, I guess. So what I went on to do is I got my first 5 investment properties first. So I was making a certain amount. Then we purchased the home together. And then with the 5 properties I brought, took care of the mortgage note that I had. So I guess it's house hacking with a little twist, just, using the assets that I had to take care of the mortgage for our home.
Nice. I like that because yeah, maybe some people see or hear the term house hack and they're strictly thinking, sometimes sharing rooms is what comes into play, or sharing walls. But like Gus, like you're saying, you're house hacking with a twist, right? You're doing it in a little bit different way, but you're basically covering your primary housing costs. And even for myself, I'm kind of doing like a reverse house hack where my parents are aging, so for now I'm back with them, but I'm renting out what was my primary residence now, right? So that mortgage is being covered for, right? So my living expense has definitely gone down. And Curtis, who has his claim to fame, is his first house hack. So Curtis says, everybody can house hack. He'll die on that hill. And definitely, like I said, I always like to talk about Curtis's story. For those that don't know, they probably do know by now, and he always wants to clarify that yes, he did shower and everything, right? But his first house hack, right? He had no shower, and he also wants to he did have a toilet and a sink, so there was running water in the unit. But he basically boarded up a room, right, separated from the rest of the house. It was his living space, but he would go shower at the gym, shower at the mom's house, shower at the girlfriend's house. But he sacrificed, for 1 year, and I believe he's on his second, and now working on his third purchase, and he's just trying to navigate that and figure out what's the best way to do that.
That builds character, just to put your mind in, hey, I'm going to do this, and for 1 full year, I'll be able to do that, and then move on to something better. So, everyone can't do that. You know what I mean? Everyone can't, either you're too bougie or you got too much pride. He put that all to the side and said, hey, I need to get this done. And for 1 full year, I'm going to get this done, and then I'm going to move on to the next thing. That's fucking phenomenal. And one more thing I wanted to bring up. and Mark, you kind of touched upon it. Using other using other people's money. I mean, I think that's how. And when I say using other people's money, I don't mean this in a negative way. I didn't want to pay for my house with money out of my pocket. That to me, that I'm losing if I'm doing that. I wanted to build something as far as my portfolio and then have that take care of my property. I don't want to go into positions anymore where I'm using my own cash unless I really have to use my own cash. So I had an opportunity come to me recently. Normally I buy things cash and then I fix it up and then I rehab and I do the whole burr. This was a bigger property. I can't buy it cash. So my conversations at that time were, I know two people who have money that are not doing anything with their money. Let me go ahead and have a conversation with them, see if this works for them. Now, they both said, as far as the numbers, not the best what we're looking for, but we're willing to hear more ideas. So that was my first stab at trying to, I don't know if you would call that, it was going to be more of a partnership, but a syndication to a degree. I'm like, okay, so this for me at least, this is the way to go. Using other people's money to, I'm going to be honest, I got that from Cody. When I heard Cody's story, I was like, wait a minute. So this guy just positioned himself in a great position and he didn't use barely any of his money. This is how America works to a degree now. No one using their own cash. They're using everyone else's money. So I just wanted to touch upon that real quick.
Hyder does say, I wonder if house hacking has allowed owners a better perspective of being a landlord versus offsite landlords. Hmm. Yeah, I think that's kind of too what you were kind of touching on, Gus, too, right? When you do that 4-3-2-1 strategy, right? Being you also learning kind of the business and being a landlord and learning how to operate things, right? So I think that's a big part of the 4-3-2-1 strategy also.
I think too, on-site landlords where you're renting maybe a carriage house, or now, right, everyone's talking about adding ADUs and the areas that will let you. That's another way that you can make your home. Maybe you have your forever home and it's kind of an expensive home and it just buffers your payment, right? You add an ADU and it's expensive up front, but long term you're increasing the value. It's helping you cover your expenses. I think we saw that forever with carriage houses, and now it's kind of coming back with ADUs.
Um, Marlin RE says, I split a single family into duplex. It covers the mortgage and bills. Definitely a house hack. Yeah, there's a lot of creative ways out there, right? So, like we said, maybe house hack has a general terminology to it, but basically, it's if you can lower your cost of living somehow by using your residence or house, then even Justin Canberra, one of his best properties he ever bought, and I don't think he planned it out that way, but he has like a parking lot on that unit. So he has like, I think he has 12 or 15 parking stalls on there, and he's close to the airport. So he has people paying him monthly. I think he generates 3 to 4K a month just from
Oh,
his parking lot. Yeah. So he actually has, I think he has lines now. He has like cones out, like, but people are paying him monthly to park at this property he has.
It's like storage units too. It's easier to deal with than toilets and
Yep.
heaters and plumbing. That's a good way to go.
To Gus's point, Victor says they say if you find a good deal, money will line up. Definitely.
yeah, yeah.
Well, and you'll find it. If you have something that's good enough and you don't want to lose out on it, make it work.
Yeah. Hey, Andy's here, and if those of you don't know, Andy also started his YouTube channel. He put out his first video, I believe, the other day, and you know what? It's probably my fault, me being a bad friend. I never knew why he calls himself Lane 5, but if you go check out his channel, he actually explains where Lane 5 comes from, and it's a very interesting story. So go check him out and give him some support over there. So it's not just about real estate; it's about faith, fitness. So yeah, here is his channel. Um, Hyder says my legal mentor has not looked deep into it, but says he did not see an immediate workaround to attorneys reporting cash buyers. A new proposal by FinCEN, I think. Oh, yep, definitely. So, for those of you that may not be following on that, FinCEN is in the news again. I believe it actually started March 1st, though. So it's kind of trying to maybe money laundering, things like that. So if you are purchasing, I think it's purchasing without using a lender or some sort of lender trends, right? So you have to report these certain things. And I've seen a lot of videos, especially a lot from Anderson Advisors. They've been talking about it a lot, and I think it's going to impact a lot of like sub two transactions, things like that. But basically, I think they're same thing. They're going to use land. You're going to try and use a land trust and things like that to try to work around it. But
it's just a reporting thing, right? I mean, it really doesn't matter. They're just trying to prevent laundering of money and to
yeah,
buy real estate. And so if you can document where your money came from or it's from an invest, I mean, it's just,
yeah.
it's not a problem for you if you're not laundering money.
True. Well, true, but there is those people that just don't like giving out that information, right? Like there's just people that are totally anti-government and like they shouldn't be messing with my stuff and they don't, So yeah, exactly though.
Okay,
It's
but if you want to play the game,
yeah,
it's like you can't go to a title company and give them a bag of cash, right? If you
yeah.
put more than $10,000 in a bank account, it's going to do a flat. I mean, these are just the rules and you play with them.
We're seeing a lot of out of the country buyers coming around our area trying to buy stuff. And I thought I had a buyer and I was like, hey, you got to send the earnest deposit check. And it was kind of like a hassle to get the check. And they wanted to wire transfer, things along those lines. We found out that he ended up being fraudulent. So I'm not 100% sure what he was looking to do. So it seemed like, because he wanted to put a larger earnest deposit check, he wanted us to take it and then he was going to fall out of the deal. So we sent him money back. That's what it seemed like. I don't know if that was what his target was, but we've been having a lot of meetings around our community about, a lot of these out of the country buyers who are looking to pay cash and they're just looking for ways to get money from us. So
That's why, Gus, I don't know if your title companies do this, but even if it's like $500 earnest money here, if a deal falls apart, it takes 2 or 3 weeks for the title company to issue that earnest money back, even if it falls apart early on, because they have to make sure it clears all the way through their bank account and they know it's solid before they'll return it. People try to do that all the time.
Yeah, it's a lot of weird, and some other stuff is going on too. So we're having, and I'm only saying what's going on. So we're having a lot of what the news is saying. Chinese gangs come up here, and this is what the news is saying. This is not me saying this. And what they're doing is they're buying houses for cash, and then they're doing medical marijuana grows in those houses. So there's been like over 30 busts throughout the state of Maine, and they're all over the place. So I had to talk to the police early on because these guys came up from New York. They wanted to buy a house. I'm a young agent. I'm only thinking, okay, these are just people looking to buy a house. And I said, hey, so what are you guys looking for? Because the biggest concern that they had was their garage. They wanted to make sure it was a certain amount of amp that goes along with it. I was like, she was like, do you know electricians? I was like, I could find some. What do you guys plan on doing? He says for Chinese restaurants, we fix the equipment, and we'll be fixing the equipment there. And I'm going to be honest, I don't really care what you're doing at the end of the day. I mean, I'm just helping you buy the house. So cool. I didn't think much of it until I got a phone call like 2 years later asking me about this particular person. I'm like, oh, because then I look in the newspaper. He's in the newspaper with like, the mugshot with 4 other guys. I'm like, oh, so that's what he wanted to do. So we're seeing a lot of different fraud coming. And Maine is not a state that's normally sees stuff like this. Maybe in bigger cities they're seeing this. We're seeing a lot of weird stuff going on recently.
Well, I remember listening back to, how David Green came on to Bigger Pockets, but originally years before that, he was a guest on the Bigger Pockets show. And when he talks about when he first got started investing in real estate, he was a cop in California. He started investing there. And then I think he started investing in Arizona, just places where he could buy and his money could go further, whatever. He found a realtor that he found on Fox and Friends. And so he thought they'd be reputable. And then that realtor ended up getting a hold of him saying, hey, I'm not allowed to do any real estate activity. They were being indicted or had something legal going on because they were helping cartels purchase homes to launder money through the home purchases. And I don't know if that realtor went to prison or they got, but he's like, and so I thought I found a trusted realtor and then I had to find somebody else. But that was a realtor that he used early on, and they got slapped because they were helping in cartel launder money through home purchases.
Yeah.
So Ike Hobbs, who just did a refi, says he had to fill out a FinCEN as a buyer and seller. Hyder said, to Emily's point, it's just reporting. The funds still need to be settled and tax liabilities still need to be established. Alex, the accidental investor, says it's because of the money laundering, fraud, and political bribery in Arizona. Let's touch on this real quick because Curtis is saying when I have more units, I'll be on the Emily and Gus show.
Bro, you can come on now. We'll have you
Yeah.
on now. Hear your story. We'll coordinate with you. Message one of us on Instagram.
And Gus, your podcast is called what? Behind the Doors? Is that what you named it?
Yes,
And
sir.
so what's the kind of thought behind that, or what are you focusing on for your podcast or channel?
Just general conversations, just like your platform, just like some other guys' platforms that I see. Just having, that weekly conversation about real estate, where things are, and just investors across the country. So we'll hit on different topics, and if anyone wants to join on, I'm not opposed to anyone. And I want to go back to one more thing Curtis said. So I think what we wanted to do is get it. Let me not say we. Let me say me. I wanted to get people on who had bigger portfolios. So now, maybe that gets more of the audience, but that's not what it's going to be forever. I think, that was just to make a splash. And as time goes on, we want everyone on it. So that's why I'm watching other people like Curtis. I just said it, I watch your podcast. I've seen you on Marc's page before. I just think, you say that interview you did was an awesome interview. So now when your next one comes out, I'm going to reach out to you. Hey, come on our platform. Let's talk more. So I don't want anyone to think, because this is the second time I heard that. You don't have to have the biggest portfolio to be on our podcast. You can have whatever. We just want to talk real estate at the end of the day.
And so many people are doing things in different ways. And so I think to just have this type of investing, somebody that wants, like we've talked, I think it was Dylan, one of the guys we talked to, he's like, I want 1,000 properties. Like, I freaking don't. Gus probably does, but like, I'm like, hell no, like good for you, but heck no for me, And so that's what I love is just hearing everybody's different. And even at the ORAT event, sitting at lunch with people and all the different ways people are doing it and the different goals people have with it. I just want all that information to be out there so the person who wants to do it that way can learn from this person's story. So yeah, anybody, any story, anything related to real estate, I want to talk about it and have it on there.
Wait, what event? Oh wait, Gus, you weren't there, right?
I'll be at the next one.
Nah,
yeah. But we also had, and Emily could talk about it also, we had a business coach on there. We had a real estate agent on there. So it's not all investing there, what we're talking about.
Actually, when was the day? Because you had a giveaway, right? What did it pass already?
No. So you guys go if you want to sign up for this. So Steve Rosenberg, who we had on the podcast, and he is an awesome business coach. He has been a real estate. He used to do management of rental properties, but he's a pilot. He's more like a business coach, and he's just really a smart guy with systems and optimizing your businesses. He's going to come on the podcast with us next week, and he's going to do a free, like, no BS business coaching session with somebody on the podcast. The entries are going to end this Sunday at midnight. The link to that is in my Instagram bio. So go and sign up for that because somebody's going to win that and he'll kind of go through and talk, whether it's your investing business, whether it's a different business. When we interviewed him, me and Gus were both like, and I've actually hired him as a business coach to help me kind of get my business, because I'm crazy disorganized, and get systems in place for my business. So I think that will be super helpful to somebody if you want to go sign up for that, but you have to do it by Sunday, and we're recording next week. So all the dates are in that link.
And what if so they have to have a business or having like a real estate portfolio? Would that be, you think that would be
I think real estate portfolio is fine because to me that's still a business. You still his whole thing is he's a full-time airline pilot, but he started a property management company and then they got sold to I think private capital because they systematized it so well. He uses a lot of VAs. I think they were running their management company managing like 1,000 rentals with 60% VAs. So he said if it doesn't require a license or a handshake, you should be outsourcing it. So just really good with getting your systems in place so you're not running yourself ragged, which is what I feel like I'm doing with my investments right now. So trying to get things where I'm not just running myself into the ground.
So there is Emily's Instagram page. So anyone in the chat, go over there, enter yourself there. I mean, that'll be a cool opportunity to take part of if you can. So Curtis, if you are here, I think it'd be cool for you to try to get on there. Yasik says, Mark, I want you to interview Emily's husband to have a spouse perspective on real estate and living with a I would definitely do that if Dallas would do that. But that's not my call, man.
I'll ask him. So if you look back on my YouTube channel, there's like 1 or 2 episodes he did with me in my podcast early on years ago. And it was hard to coordinate our schedules. And then I just think it wasn't really his thing. So he's done it a couple episodes, but I'll ask if he's willing to.
Yeah. Well, I think a good one would be maybe like a Wednesday one, because a lot of times, as you probably know, our Wednesday one just goes to shit and goes to whatever topic randomly comes across the chat, right?
Wednesday is the worst day for him because it's
Oh,
Wednesday. So that's like
wing
our
Wednesday.
day that we have commitment. So it could not be a Wednesday for him.
All right. Well, we'll figure it out. I think it would definitely be a good one, of fun. And tell them it'd just be super chill and super relaxed, and we can talk behind your back, I guess, for a little while.
Document it.
I do. I kind of told Emily already about this, and this is a question I've kind of. Oh well, before I get into that, is there anything else you guys want to touch on about the your home being or your primary residence being kind of a retirement plan before we kind of wrap that up? Anything else you guys want to add on that?
I would just say sooner the better. Get in real estate as soon as you can. Obviously, make sure you're doing your due diligence and you're making the right move when you do. But take that leap of faith. That's all I would have to say.
Do it with intention. I don't think it's a retirement account. I think it can be an investment tool. The first property I bought, I rented, and then I lived in it for a while and I rented it. I bought it for $130. It's probably worth $205, $210 now. And when I started renting it out, I rented it for $1,000 a month, and now it rents for $1,550 a month. And so it's something we've held on to. It's 5 years from being paid off, and then it will be pure cash flow. So we were able to hold on to that first one, and it was a great investment. Not my retirement plan, but it will be a piece of it. So I think your first home or your primary home can absolutely be an investment.
See, people want Dallas on. I said Dallas would be a great guest, so you gotta let them know that people are hoping to get him on.
Okay.
But I brought this up probably to all my recent guests. Mr. Beast, everyone knows, he gave away his the season 2 or year 2 winner. So the question is, so I'll let Emily answer first, so because she kind of knows where we're going. So Gus, you can think about it real quick. But so would you take $5 million up front or $50,000 a month for life? So Emily, what's your thoughts on that?
So we talked about this before. I would do $50,000 a month. There's nothing that I can't do in my, I'm chill. I don't want anything fancy. There's nothing that $50,000 a month couldn't do for me or let me do and invest into and continue to do. So for me, $50,000 a month for sure. And then if you do the math, you don't have to live that long, at least as long as we all anticipate to, for that to balance out and pay off. Because $50,000 a month, that's $600,000 a year. And so that's less than 10 years to get there. So I would do $50,000 a month for sure.
Gus, any quick thoughts off the top of your head?
Yeah. So if this was me, this is how I see it. If this was me a couple years ago, I'm taking the $5 million. And the reason why I'm taking the $5 million is because I got a bunch of drive to take that $5 million and turn it into $25 million. Now, I'm getting older. I'm hearing different people's opinions. That $50,000, just collecting it, is not a bad thing. Put that on top of my cash flow, I think I'm living good. So I think that's more of when you start getting all these grays in your hair, that's more of the easier approach. But if I'm in my 20s and 30s, I'm definitely taking that 5 million without a question.
I love where, everyone's, like we said, where their first thought goes, right? I mean, if you have time to think about it, yeah, you can factor in other things, but it's just that person's initial thought on the question, and where they first go to. Um, but on that kind of point though, have you guys also seen Coach Carson's recent video by any chance? I forget. He always has this regular guest on from his community. I think it's like F.I.R.E or something. He very smart guy, but I like what he said in there, and it's kind of to what Gus, what you were saying too just now about the 50K a month. But almost, people like striving for financial freedom, but a lot of people get afraid of financial freedom. So when they're there, sometimes they get afraid of actually pulling the plug, just because now they're kind of like have to strictly rely on what they built. So they like working to that financial freedom, but once they even achieve it, even then it's hard for them to pull that plug, because now it's like, now I gotta strictly rely on what I built over these years, and what if doesn't work, right? So it's a great video. I would definitely recommend a lot of people out there to watch it if they haven't. Hey, BBQ8282, haven't seen you here before, but definitely check out everyone's channel. Please like and subscribe all the channels in the community. But 50K a month forever, for sure. Yeah, definitely. I think a lot of people, that's where they're first. But like you said too, Gus, I think if you're 20 years old and you've been doing this for a few years, like Cody, right? That was his. He went 5 million. That was his first thought, right? Like, oh, I can turn this. I have, this. I'm going to turn this into 100 million or something, right? So definitely, it's also where you are in this journey.
And what are you investing in? Because what I'm buying, I'm flipping houses right now. I'm in a pretty reasonable cost of living area. My down payments are 50 to 75,000. I bought a fourplex once. I had to put like 100 and something down, right? But usually, like, that's enough to keep making down payments on things. I don't necessarily think I want to be managing a portfolio where I have 500 unit apartment complexes, right? I don't think I want that unless I have somebody running and managing that for me. And so I think, what are you going to buy with it? Because if it's not actioning for you, then it's just sitting there.
And so, like Hyder, like I said, it's interesting to see where everyone's first thought goes, right? So he's looking at it from a, how can I know that almost like 50K is a promise every month, right? So he's like 5 million is one time. I get it, and now I don't have to worry about getting paid, right? Where yes, you're supposed to get 50K a month for life, but it's like, what if?
Yes.
Yeah, right. So that's where Hyder's first thought goes, right? And then Alex, the accidental investor, says, "Yeah, I think this is a great point too. I would, I would need the 50K a month. I'd probably mismanage the 5 million, right?
Know
So,
yourself, buddy. Yep.
yep.
What can you? Yep.
Yasik says, I take full health over any money any day. Yep.
Yep.
Um, oh yeah. So Arion Shihaj. I could be saying it wrong. Hopefully, I didn't mispronounce. But that's the Coach Carson's channel. Yeah, definitely. I love when he's on. Very different perspective. So on that point too, he was talking about retirement. So we're talking about right now, your primary residence. People are using that as a retirement plan, but he looked at it as, even like people when they plan their retirement. Maybe they put their money in retirement accounts, and even Social Security, so you have maybe after 60 planned out, right? Your retirement funds plan, but why don't more people focus on maybe that 40 to 50, that 50 to 60? Plan out that, so that you don't necessarily have to wait to 60, but it's kind of a moving scale, right? So maybe you plan from 50 to 60 a certain amount of money so that you can comfortably live, or live, cut your, you have a lower expense, but you have a certain amount of money. And now when 60 hits, you have even more income coming in because you plan from 60 on, right? So, but most people just almost break it down from 60 on and planning, and they don't ever focus on little 10-year phases maybe. So I thought that was a great point he brought up also.
And how many people have you had tell you, I saved all this money and now I can't do all the things I wanted to do because I don't have the mobility, or, I want to go on this vacation and I can't do the same things. So you also have to enjoy your life and enjoy your family. Maybe 40s, 50s, you can do those things depending on your health. Once you're 60, 70, you can't go hike that mountain. You can't go surf, or, whatever. So think about that too.
To that point, I mentioned earlier this week. So my son, finally learned how to ride a bike. He never wanted to at all, and they finally in school they had these teaching or classes. So he loves riding his bike now. So I had to go get a bike too, and every little muscle in my legs and butt and it hurts. It so it's like I haven't rode a bike in like probably 20, 25 years, and now it's like I'm trying riding a bike and it's like, man, everything hurts. James Hillis says I'm almost 60. I would take the millions, 5 million today. Yeah. Um yep. Alex, the accident investor says my why is to maximize my 50s.
There you go.
BBQ8 says you will see my interview with Zuber in his channel hopefully in a few days under guest name Billy. Okay, very cool. I'll be on the lookout for that.
Billy B. Quest. No, I'm just kidding.
Well, it's always fun to have you folks on. We're not live streaming, right, Gus? It's a recording, right? Sunday.
Yes.
Okay, so I will be with Gus, so stay on the lookout I'll be recording with Gus and some other individual. I believe Dylan from the community will be on and a few others.
Correct.
So check that out. Do you have anything else coming out? Another record like what you've already done coming? I mean, without a fake AI image of Emily on it, kind of thing.
Well, I like those cover, but yeah, I get it. I'll try to give it better prompts. Be like, get it right. But yeah, I got 4 episodes in the tuck right now. I'm gonna release them each on Friday, and like I said, So I will say this last thing: you guys have let me know that Gus, you're in a good spot. Take time and look at what you can do. And Marc is like, hey, do something on YouTube. Do something on YouTube. This was my entry into YouTube. So I got plenty of time to do it, So I'm gonna deep dive into it, see how I like it, and with your guys' help and all the other people I know in real estate, make some content out of it. So I appreciate you bringing it up.
Don't maybe in the prompt you just put Emily RBF face, and it'll come out. It'll come out as her natural image. Emily, you said you recorded with Zuber recently again, right? And so what's next for your channel? When's the next? And I know you did something with Lauren also. That was a lot of fun. Lauren finally also got her channel up and running too. What's the next thing for your channel?
Me and Gus have one coming. I have had like chaos on my rental property since last week. I was filming with Gus and I literally was getting videos from a tenant of a sewer line backing up. And then I had another basement flood through a window well. And then I had a furnace go out. This week has been crazy. So me and Gus will either have one coming out today or tomorrow with Gabriel Hamill, who's a real estate investor who's pretty well known. And so hopefully I just got to get a thumbnail made for that one. And then me and Gus are doing another recording today. And I'm sure Gus will post a screenshot coming soon for next week on that one.
Right. So everyone be on the lookout for that. And if you haven't and you didn't hear, there is Emily's Instagram page. She's still offering the business call or jumping on their video with Steve Rosenberg. So go enter yourself for that. And let's see.
Emily, are you pretty tall?
Me, I'm 5'10".
Oh, okay. Someone just said Emily is bigger than you, Marc. Better watch how you step towards.
Yeah, well, yeah, I get that all the time. I tell everyone I am Patrick Swayze from Roadhouse. When everyone goes, I thought you'd be bigger. Yeah. When I meet you in Vegas, because you'll see why. I tell everyone the belt that I got from Zuber is from winning the midget wrestling on Fremont Street. So. Let's see. Charles McCune says 5 million sounds great, but I don't have a tax plan to maximize that much at once right now. I will be able to build a tax plan for 50K in short order. Yeah. Like I said, it's interesting to see where everyone's for like Charles looks at the tax side, right? So everyone goes to a certain place when they hear that option. So Bill, thanks for stopping by. Lane, Andy, when's your next video coming out, man? So you got to put one out there. But everyone, thanks for tuning in. It's always fun having Emily and Gus on. Gus, I'll see you on Sunday. Everyone go to Emily's Instagram page. Go enter to be a part of that opportunity. And I will see everyone tomorrow with Bitcoin Nick. I forget what time. We have to go earlier, but I'll see everyone tomorrow if not. But thanks for stopping by.
want to come
What?
talk on me and Gus's podcast about your real estate investing journey, we don't care if you're on your first one or your second one, or like, we just want to talk about the different strategies people are using. So message me, message Gus, we'll get it coordinated.
Exactly. It doesn't matter if you're just starting, how big your portfolio or how small it is. Just they want to talk story. And just a reminder too, yeah. So Wednesdays we'll be bringing on new school members. So if you are in school, message me, and if you want to jump on, I think we have the next 4 weeks lined up already. So it may not be until April, but let me know if you're interested. All right, everyone. Have a great weekend coming up. Okay, bye.